Today we are here at C2 with Daniela Lopes Costa, who is a tax lawyer in Portugal and with whom I have been working already since a couple of years now. Thank you, Daniela, for being here.
Thank you.
Today we are speaking about the taxation and the tax compliance of investors in private equity funds, alternative funds in Portugal. Would you like to give us some context, a bit of framework on the taxation and the tax compliance for individuals or corporate entities investing in alternative funds in Portugal?
Yes. So the alternative funds are a part of a collective investment organism in Portugal, which has a specific tax regime and tax benefits, namely not only for the fund itself, but as well for the investors that hold participation units. And there are several differences according to the type of individual, if it's an individual or if it's a corporation or an entity doing the investment, and as well depending on the residency, if it's in Portugal or outside. I would say that to highlight the most relevant point is that the taxation is considerably lower than the normal taxation. The maximum taxation that we have overall is 10%, which is 18% lower than the normal taxation. And for tax residents in Portugal, for example, if they are individuals, the taxation is on distribution, so similar to dividends or on capital gains, 10%.
So this is a quite efficient way of investing in Portugal.
It is. If you are a tax resident in Portugal and you don't want to overload with tax compliance or so, it's a direct investment in the sense that is a withholding tax, a fixed withholding tax that the fund already give you in the sense that you don't need to do extra work, and if you don't have other income in Portugal, you don't need to file any tax return. So it's the work done by you in that sense.
So so just to summarize, there is a certain advantage in investing in this kind of structure in Portugal, but there is two main type of investors that are resident and non-resident in Portugal, right?
Exactly.
So I would say that the majority of our investors are non-resident in Portugal. We have investors from all over the world, but I would say that majority of them are from the US. So since this is our use case, would you like to explain us a bit how it works for an individual resident in the US, the taxation of an investment in a private equity fund?
Yes. So if it is an individual in the US that does a direct investment in his personal name in a fund in Portugal, the taxation here on the distribution on dividends or on the capital gains will be 0%. And this is the principle. What this means in practice. In the case of the US is one good example because it's one of the more complex situations since US continues to tax and attracts the taxation on the nationality or the visas when you have the case of the citizens that had the green card. So even so that here the taxation is 0 and you avoid the situation of double taxation, you may be subject to a taxation in your own country, in this case in the US. When there is any type of taxation, although in Portugal, which is not the case, in this example, US may use the tax credit scheme in order to deduct that tax.
Okay. So there is, I imagine that Portugal have many double taxation treaties, no? Majority of the country have double taxation treaty with Portugal, right?
Exactly. Portugal is one of the jurisdictions, not only from Europe, but from the world that has a lot of double taxation treaties. In the case of the double taxation treaty with the US, there is a tricky situation because the main writing of the treaty is, of course, very similar to others, but there is an appendix that says the taxation will continue to be a tracked in case of nationals and citizens, US citizens to the US state. So that is a tricky situation. However, it continues to be very attractive in the sense that we managed to work very well with the tax authorities of both countries, even so that you need to report, of course, the income that you have in Portugal. The income being exempt of that investment, it is a benefit for sure.
Okay. And what about tax compliance? So a non-resident will still need to file the tax report in Portugal, just for all owning participation shares in Portugal?
Good question. So the tax compliance is also very specific, and there is a regime, specific regime for investors in funds like this. So in this sense, non-residents, they don't need to file the tax return in Portugal, only if there is a capital gain and they decide to sell the share. But on the normal nowadays of the fund, on the distributions and on income being earned, no tax return needs to be filed. And on the specific case, even if you are a tax resident in Portugal, and if by any chance you don't have any other income, and if you have the taxation on the fund as 10%, since it's a fixed withholding tax, you don't need as well to file the tax return. So it's quite attractive in the sense that takes out a lot of the work from the investor with this structure.
Let's expand a bit on the possibility for the investor to hold the shares in the fund, not personally, but through a corporate structure. There can be two possibilities. Either the investor set up a Portuguese entity and hold the shares through a Portuguese entity, or he can also hold shares through a corporate entity that he owns in his country. What is the difference between these two possibilities?
Well, the difference will be major. A Portuguese entity that is not exempt by nature, okay, for this type of income, will be subject to taxation in a normal corporate income tax, okay? As if we consider to be an entity that is outside of Portugal in a non-blacklisted jurisdiction, and if that entity, of course, doesn't, it's not owned by more than 25% of Portuguese share capital, then it will be exempt. So the difference is that I would say the taxation to attract as a Portuguese entity is the maximum, or at least the corporate income tax rate, which is 21%, 17% until the first 50K. And if it is an entity outside of Portugal, the principle is that should be exempt. Of course, this will depend on the double taxation treaties applied and case by case, but this is the generic rule and according to the law that we have.
Okay. There's something that I would like to clarify with you because it's often a big confusion. Here in Portugal, we have a very attractive tax regime that is called non-habitual resident. And oftentimes it is confused that this can also be beneficial for people outside of Portugal investing in a Portuguese fund. That it's not the case. So let's clarify what is the non-habitual resident regime and how and where it applies.
Yeah. So the NHR, the so-called NHR for the non-habitual tax regime, is applied for tax residents. The name non-habitual tax regime is actually, I would say, a bad name because you are considered to be a normal tax resident in Portugal. The difference with the NHR 2.0 or with the old NHR that we still have is that you'll be taxed with some benefits for a period of 10 years. Cross-boarding both situations of the investment in the fund and the NHR, it's important to highlight that the NHR does not impact these tax benefits. We are talking about tax benefits in regimes that are independent of the NHR. The NHR itself, well, the old NHR, let's say the NHR 1.0, is a tax benefit for the period of 10 years that will be dependent, those benefits, on the source of the income. If we are talking about Portuguese source income, you need to have the NHR plus a value-add activity, according to the list that is approved by the government. And if that is the case, you may have a taxation of a flat tax rate of 20%. Of course, this is good. The normal taxation in Portugal for employment and self-employment is 0 to 48%, so the 20% is a very good chance. Then you have the benefits from the outside sourced income, dividends, interests, sometimes capital gains, pensions. And in the case of the dividends, interest, so I would say capital income, the taxation is 0%, so are totally exempt, which is applied as well for employment income. Regarding the NHR 1.0, the application of the regime of the NHR for pension outside of Portugal, the taxation is 10%. The difference between the new NHR and the NHR, the old NHR, is that the pension is no longer included and the requirements are a little bit different.
Okay. So, if I understand well, the NHR is a regime just for people that really want to move here, and it applies for foreign income. You just have an advantage for specific activities, that is labor activities in Portugal. So in general, the NHR doesn't apply for a golden visa investor that doesn't want to move in Portugal.
Exactly.
Okay. So let's just wrap up speaking about the which is the most efficient way to invest in a private equity fund in Portugal for someone that is interested in the golden visa.
Okay. On the perspective of investing in a fund for the golden visa, I think it's very smart to start, of course, the process as being non-resident in Portugal. So still with a residency outside of Portugal, no matter where your country is, because first, if you do it and you are individual, the taxation, it will be 0. Which is highly beneficial from the distributions of profits that the fund may generate. And then, if it's that the case, because not a lot of people that have the golden visa want to actually transfer their residency to Portugal, but if that is the case, I would say that still the taxation of 10% is very, very low. And even so that you are in a country like the US, you continue to use this 10% to deduct as a credit, a tax credit. So it continues to be highly attractive in my opinion. I would say that is one of the most attractive tax regimes for investment in Portugal. And as well, if you are a tax resident in Portugal, you have an option to, instead of having the withholding 10% tax rate, to choose the aggregated income. So meaning all of your income will be aggregated and you can have an exemption of 50%. This is very technical and complex, but what is important to sum up is that you have options in order to choose what is the most beneficial way to do it. But straightforward, invest as a non-resident and collect the exemption, have 0% taxation.
Okay, so in general, it's always better to invest in your individual name instead of a corporate entity.
Yes, it could be beneficial, but that will depend a little bit case by case of the costs that you may want to deduct or not.
Yeah, I would say that there is a case that we have sometimes in our fund in which American clients want to invest through a corporate structure because they want to use the IRA, that is the retirement account in US, and in order to do so, they need to structure a double layer of an American LLC and a Portuguese LLC. So in this case, is more a necessity of using a certain type of funds, but it's not the rule. So in general, yeah, it's better to invest in your personal name. But if you move to Portugal and you are a US citizen, you will still need to file tax return in US because US tax you
Exactly.
wherever you are. Just
As a tax resident, or if you are not a tax resident, you continue to declare and to pay taxation in the case of the US, unfortunately. But this is why most of the US clients that I know choose a jurisdiction where you can really work with, in the sense of having a good double taxation treaty and relationship, so that it's easier for you to plan your life and use the tax credits, for example.
So, what do you think it's important to retain as general rule or information for someone that want to invest or move to Portugal?
I think it's important to understand that Portugal has and continues to have a very attractive tax regimes, namely for investment, as we saw regarding the funds, but as well for tax residency with the scheme of the NHR 2.0 or the old NHR or the transitional regime, and continues to be highly attractive in order to retain not even talent, but as well capital in Portugal. And it's important that you are aware and conscious of your move or your investment, namely analyzing the case-by-case situation, because we are talking about generic terms. And if you do it well, it's possible to have a highly beneficial situation in the movement of transfer your residency or doing an investment in Portugal.
Yeah, if I can also add something in general in investment and in taxation, don't do it yourself because it's a complex matter, and yeah, sometimes you see they have the tendency of looking online for information, and then maybe you misunderstand something. So always consult with a professional.
Exactly.
Both for taxation and investment, and don't do it yourself because it's a complex matter. And I would also add that Portugal, like other European countries, is a pretty aggressive jurisdiction.
Yes. Yes, and I think both you and I have quite a preventive approach to matters, and I think that is the way that it should do. So if you are trying to decide if you want to do an investment, it's important to collect and read information, good source information, or contact specialists on the investment side and on the taxation. But no matter what, and it's impossible to predict the future, but especially now, I would say that our framework will continue to be quite attractive for investment and for change of tax residency and tax benefits. Not only for companies, which we are seeing a lot of movements, but also for new householders, for example, if you are young. So there are a lot of rules that are being implemented in order to put Portugal a little bit more on the map and a little bit more attractive. In which we are already, in my opinion.
I agree. I think also, I agree that there are many opportunities, and Portugal is an interesting destination for investment and for moving, for people that wants to move in. But I'm, like you said, on the conservative side. So I always tend to be conservative and not suggest or exotic strategies. So within what is allowed and with a professional, always seek for the best, the most efficient strategy, but always within what is clearly stated in the law and the rules. No?
Exactly. We have a lot of regimes, and if we learn about them and if we promote them, and if we have specialists working with us, I think it's beneficial, because in the sense that you don't need to be you can be in a lawful situation and with not complex structures and still take advantage of what some of the countries, in this case Portugal, offers, in which again, comparing to others, it continues to be very good and attractive, in my opinion.
Daniela, thank you so much for being here. Thank you so much for your time. I hope to see you again. in another podcast, maybe here at C2.
Thank you so much. It was a pleasure to be here and to be with you again, Dario.
Thank you.